I just structured a deal that will pay me and my firm $50 million. Not from an exit, not from raising a fund or building a search fund or roll-up, but from one investment banking deal that I structured without ever going to Ivy League school, spending any time on Wall Street, or coming from a wealthy family with industry connections. As a matter of fact, I don't have any traditional qualifications at all. 7 years ago, after getting my entrepreneurial start in online marketing, I worked under my first mentor, where we primarily worked on gold bullion and precious metals and stones transactions, connecting ultra-high net worths to material sources, which led me to investment banking, which is where I developed all the systems, frameworks, and tools that I use today to win and close $100 million plus deals without needing to have gone down the conventional path. Today, I own a FINRA licensed broker-dealer. I facilitated over $1 billion in transactions, and I did so in only a few short years. And today, I'm going to show you how you can replicate my success with my 5-step proven protocol, which you can get by watching to the end of this video and just commenting protocol down below. Now, since inception, me and the team at my firm have closed AIP, Eco-Modular, Low Dell Energy, as well as all of these. And guys who've applied my strategies without having any conventional qualifications, like Brendan Choi LaRosa, who is a top sales rep, made great money but had commission caps. Within 4 months of starting his firm, he closed a $200 million real estate transaction, which he made $5 million from. One deal, 4 months.
Raised 200 million. To date, 300 strategic introductions. Pretty much, Lewis is going to be you guys' advisor. He's going to give you guys everything you need to know to be able to make this business work. He's going to give you the pathway.
Or Connor and Liam, who ran a successful marketing agency, which is a great business, but they plateaued. They pivoted to advisory, closed $442 million in transactions in their first year with combined fees over $7 million. Or Alex Zastry of Savvy Capital. He had a consulting and marketing firm, switched to capital advisory, closed a $200 million project financing facility and a $125 million share subscription facility, which generated over $4 million in fees for his firm. But more importantly, I'm going to show you why this boutique investment banking and capital advisory business model is the only path that makes sense if you're serious about transitioning from being a high-income earner to creating generational wealth. So in this video, I'm going to share with you how you can build your very own boutique investment banking or capital advisory firm capable of generating 8 figures or more within 2 years, and how you can build that firm from the ground up within 90 days or less and use it as the foundation, providing the skills, track record, network, and capital base for you to then become a principal investor, which would be raising a private equity or credit fund, executing roll-ups, and build generational wealth by owning the upside in deals. So if you're watching this, you probably have already considered one of those paths as your end goal. But most high-income earners and entrepreneurs underestimate the skills that are necessary in order to execute on one of those wealth vehicles. Without the ability to influence the flow of institutional capital, have a personal deal-making track record, and a Rolodex of capital partners and investors, and most importantly, an intimate understanding of deal negotiations, the path to execution and creating wealth with one of these vehicles will be orders of magnitude more difficult. So if you've already won round 1, you know how to generate cash flow. Maybe you built a successful business doing $2 to $5 million in EBITDA. Maybe you are a top 1% performer in sales or marketing or in corporate even, clearing 7 figures personally. Or maybe you've got 20 to 30 doors as a real estate investor or just exited your first startup. Whatever it may be, you've got the money, you've got the superficial success, but you know there's something more. You know you're optimizing for incremental gains when exponential quantum wealth exists. You're essentially trading time for money just at a higher rate than normal people. And you're watching from the sidelines as private equity guys flip companies for 300% returns while you grind for 20% incremental growth. Here's the uncomfortable truth. You've hit the wealth ceiling, not the income ceiling. You broke through that already. I'm talking about the wealth ceiling, the invisible barrier between successful operators and true principles. Let me give you an anecdote. One of my mentors runs a $7 billion family office out of San Francisco. He told me something that changed my perspective. There are only 2 ways people become ultra wealthy, either private equity or building a business that appreciates dramatically in value. Now, let's be honest. If you were going to build the next unicorn, you'd already be doing that, which leaves you with really only one path: becoming a principal investor. So you know you need to go into private equity, private credit, fund management, roll-up strategies, hedge funds, whatever it may be. These are the wealth creation vehicles. You probably sketched these on napkins. Maybe you've built a deck. Maybe you've started having preliminary conversations. But here's the paradox that keeps you stuck. To raise a fund, you need a track record. To get a track record, you need to have deals done. And to get deals done, you need to have capital and relationships. And to get capital and relationships, you need, you guessed it, a track record. Every single path to principal investing assumes you already have what you're trying to build. The VCs who turned down that pitch of yours, they learned the game at Sequoia. The PE guys buying your competitors, they cut their teeth at Goldman Sachs. Or the family offices that won't return your calls, they only talk to proven deal makers. You're locked out of the game because you don't know the secret handshake. But what if I told you there was one model, just one, that breaks this entire paradox? And the only way to do that effectively is by understanding deal-making principles first, by being an advisor to other people's transactions and getting paid handsomely to do so. Capital advisory and boutique investment banking is the only business model that actually pays you to learn the skills that every major wealth creation vehicle requires. While every other path assumes you already know how to price, structure, market, negotiate, and close institutional-grade transactions, advisory teaches you while generating immediate cash flow. So think about it for a second. You learn deal-making skills by actually doing deals for rich people, guys that are already there. You build capital partner relationships by bringing them deal flow. You generate immediate cash from upfront fees and success fees when you close deals. You create a track record that LPs and institutional investors actually care about. And here's the kicker. Every single titan of finance, they took this exact path. You just never hear about it. Steve Schwartzman didn't start Blackstone by raising a fund. He started with M&A advisory. Or Larry Fink. He didn't start BlackRock as a $10 trillion asset management company. He started with risk advisory. Or KKR. They started off as M&A advisors. Apollo, Mark Rowan advised before he ever acquired. They all understood one thing. You need to master fees before you can touch carry or performance fees. So let me break down exactly how this model works. Your advisory firm will focus on one or both of these core advisory services. The first would be capital raising, which would be equity or debt private placements, or M&A advisory, which would be buy and sell side representation. The economics are beautiful in their simplicity. You charge upfront fees between $25,000 all the way up to $250,000. These are non-refundable retainers paid to you when you start an engagement. This is your cash flow, your runway, and your ability to hire and retain A-player talent. Your torque comes in the form of success fees, which would be 1 to 10% of a total transaction. So let me put this into perspective for you. Let's say you complete a $100 million growth equity transaction for a 5% success fee. Your gross success fee would be 5%. That's equal to $5 million. Less your broker-dealer split, which is the regulatory entity that provides compliance and oversight on the transaction. They would take their 10%. That's 500 grand. Less team bonuses if you have one. So let's say you break them off 30%, that's $1.5 million. Your net after properly structured tax in this scenario would equal $2.2 million from one deal and let's say 4 months of modest work. And because the business runs on the upfront fees, you get to keep all of it clean and clear. But again, it's not even about the money. It's about the skills and the track record that you're building to move into principal investing within a few years and build the track record to do so. But for the sake of argument, let's be conservative about what's possible. In your first year, which is you building the foundation, let's say your upfront fees range from $300,000 to $600,000 from, let's say, 12 to 24 engagements. Success fees from 1 or 2 closed transactions at $1 million minimum each. So conservative year 1 estimated earnings would be between 1.3 to $1.6 million after you subtract all expenses and taxes. In year 2, you scale with momentum. So let's say you generate $500,000 to $1 million from larger retainers and better clients. And then success fees from 3 to 5 closes at $1 to $3 million each. Total year 2 earnings would be between $3.5 to $9 million, which by the way, our firm far outpaced these estimates, not to mention some of the folks that we've taught this to have done so as well. But here's what these numbers don't show. Every deal teaches you how institutional capital really moves. Every negotiation builds your pattern recognition. Every deal close adds to your track record. Every relationship compounds into your future principal play. And by year 2, you're not just making money, you're establishing institutional credibility. Now, here's why this opportunity exists right now and why it's not going to exist within 18 months. AI just broke investment banking wide open. Morgan Stanley deployed AI so powerful, their advisors can do what entire departments used to be able to handle. Or JP Morgan, they just invested $18 billion into AI infrastructure. Goldman Sachs, they have algorithms identifying acquisition targets before companies even know they're gonna go up for sale. But here's what they didn't anticipate. The same AI that took them decades to build and billions of dollars to develop, you can access 90% of that capability today. So what AI has done is it's democratized access to gate-kept information. Financial modeling that took analysts 200 hours to build, AI can build it in hours. Comparable industry analysis, AI screens thousands in minutes. And target identification, AI finds companies showing capital needs signals before they ever hire bankers. The moat around high finance just evaporated, but, and this is critical, AI doesn't replace relationships. It doesn't replace judgment or experience. It doesn't replace credibility. What it does is it compresses the learning curve from 20 years down to 2 years. So, here's exactly how you can build this type of firm in 90 days using the exact 5-step dealmaker protocol that I'm about to share with you. So the first step is compliance and licensing. This is days 1 to 30. This isn't some other bullshit online business you launch with a landing page. This is institutionally regulated finance. You need to write and pass your SIE exam, which is the Securities Industry Essentials, your Series 63, which is the state law exams, and then at minimum, your Series 82, which is the baby Series 7, which you can also get, and these are your dealing licenses. Now, we provide all the study materials, but here's the hack. While you're studying, you're building everything else concurrently, not sequentially. Everything happens at the same time. You'll partner with an established broker-dealer. It could be Cadenwood, which is my firm, could be Finalis, GT Securities, Marco Polo. There's a plethora of others. And the broker-dealer provides the regulatory infrastructure while you build the actual business. And for international members, we have chaperoning agreements that allow you to operate globally while maintaining US compliance. Step 2 is the dream team, credibility arbitrage. This is days 15 to 45. Now, this is your unfair advantage. You don't need 30 years experience. You borrow it. You recruit 2 to 3 former heavy hitters from bulge bracket banks or major PE firms as advisors. Now, these guys with 30 or 40 years experience who've closed billions of dollars in deals become your credibility, your track record. They're semi-retired, bored out of their minds, they're missing the action, but they don't miss the 100-hour work weeks, and they're tired of playing golf. So I'll give you a script to get them on board. I'm building a boutique capital advisory firm. We're focused on their specialty that you're gonna see on their LinkedIn profile while you're doing your research on them. I have the energy, the technology, and the drive. You have the expertise and the relationships. I'd love to have you on as an advisor, work on interesting deals, share in fees, stay in the game, and close deals together. Their credentials now become your credentials through association. Their track record becomes your track record. Their Rolodex becomes your pipeline. Now, whatever industries they have the most experience in and deal history in will be the industries that you focus your deal origination or sales efforts in. If you bring on a former oil and gas banker, great. Now you're an oil and gas boutique. This is credibility arbitrage at its finest. Now, step 3 is capital partner cultivation. This is days 30 to 60. Before you even have deals, you need to know who will fund them. You systematically build relationships with family offices managing $100 million to $100 billion, mid-market PE firms in your specific sectors, strategic corporate buyers, sovereign wealth funds, high net worth individuals, angels, etc. The approach is surgical. Our former Goldman Sachs healthcare MD, or whatever it may be in your case, just identified 3 off-market opportunities based off your recent investments in medical devices. I think there might be alignment here. Can we set up a brief discussion to better understand what your current allocation strategy is? By the time you have a deal, you have 20 to 30 pre-qualified capital partners ready to look at the deal. Step 4 is winning mandates or closing clients, getting deals to work on, and getting paid upfront fees. This is days 60 to 90. Now you're a completely different animal. You're licensed, you have advisors on board, your capital partners are warm, you have broker-dealer backing. You're not hunting for deals, you're selecting them at this point. AI identifies companies showing capital need signals, leadership changes, geographical expansions, competitor acquisitions, debt maturities approaching, etc. You deploy custom email servers, sending thousands of personalized messages a day, scaled LinkedIn, running in parallel to fill out your calendar with 10 to 15 qualified calls every single day. Now, on these calls, you're not selling, you're qualifying. You skip the small talk, you control the frame, you run the discovery for 10 to 15 minutes, and you position your firm in 2 minutes flat. We have $14 billion in transaction history. We have 30-year veterans on our team and 3,000 investor relationships. Now, obviously, you're gonna go into more detail based off your firm's track record. And the commercial terms, you state clearly $50,000 to $100,000 upfront for an engagement fee, and we charge 4 to 7% on the back end as a success fee. If everything makes sense, is that structure something you'd be amenable to? When you do this right, professional, direct, you demonstrate competence, 30 to 40% of your first calls will sign to mandate. That positioning commands $50,000 to $250,000 upfront retainers, non-refundable. Now, step 5 is the live deal execution. This is day 90 plus. Now, with the right mandate or deal and process, closing $100 million plus deals in 3 to 6 months is possible. But let me be clear about what this actually means. From signed mandate to closed deal, the average timeline is 6 months when everything goes right, sometimes longer and rarely shorter. The bigger the deal, the more complex it gets. Now, here's the process your advisors will guide you through. In the first 1 to 2 weeks, you prepare your materials. You create your institutional grade investor presentations, your financial models. You populate the data room. Your advisors will review everything and catch whatever you've missed. Weeks 3 to 8 is your market approach, your systematic outreach to cultivate capital partners. Your goal is 3 to 5 quality meetings per week. You're going to send emails and LinkedIn using our institutional grade databases in addition to the capital partner relationships that you've already cultivated. Your advisors will help you position the opportunity correctly for each investor type as well as each firm. Now, weeks 9 to 12 are management meetings. You facilitate investor issuer meetings. Now, the issuer is the client. They're the ones actually issuing the securities. You generate multiple interested parties to create competitive tension, and your advisors will prep your clients so they don't blow any meetings. Now, weeks 13 to 20 are term sheet negotiations. You want multiple offers here to create leverage, and your advisors will have done this hundreds of times. They'll know which terms and then term sheets matter and which ones are noise. Now, weeks 21 to 24, this is the due diligence and documentation period. This is when the lawyers take over, and deals can die here. I've seen it happen many times. Your advisors will help you and your team navigate all of the potential landmines that they've seen every way a deal can blow up. Now, here's a reality check. Without the advisors who've closed billions of dollars in deals, you're flying blind. With them directing you, you can close institutional deals in your first year. Now, again, your fee on a $100 million deal at 5%, that's $5 million gross. And after splits with your team and broker-dealer and advisors, you can net $2 to $3 million clean and clear. One deal, 6 months, but only if you execute properly with the experienced guidance. Now, this is life-changing money for the average person, but again, you're not average. This is just a stepping stone. And this isn't theoretical. Our members are executing this playbook right now. Like Jamal, who is running a startup consulting firm. He had good revenue, but couldn't scale past mid-7 figures. He just closed the first $10 million tranche of a $100 million capital raise at 5%, which he made $500,000 on. And when he completes the full raise, that'll be $5 million. Dimitri and Fabian are 17 and 18 years old, no college, no connections, they just have hunger. They dropped out of high school after closing their first $150,000 upfront retainer, and they're now generating multiple 6 figures in monthly engagement fees and working on closing their first back-end success fee. Matt was a serial entrepreneur with multiple exits. He knew operations, but not institutional capital. In his first 90 days, he closed a $125,000 upfront fee and secured his first term sheet. And by May, he had collected $225,000 in upfront fees alone and currently managing over $4 billion in active live deals with projected success fees exceeding $20 million. And Nick had a real estate portfolio but was tired of all the tenants, all the maintenance, and shifted to capital advisory, focusing on real estate, and just secured 3 term sheets from a single family office for 2 separate $100 million development deals, which his success fees are $3 to $5 million per deal. And all of these guys as well. And since August of 2024, our community has generated over $100 million in member revenue. This is my firm as well as everyone in the community, and we facilitated over $5 billion in transactions and built multiple 8-figure firms. The average time to first mandate is 72 days. 72 days to collect your first upfront fees and get your first deal going. And several of our members, myself included, are now transitioning to the principal model. I'm currently raising a $100 million vehicle for a private credit fund, which will focus on providing alternative capital sources and non-dilutive capital to SMEs. The progression is exactly as designed. You learn through advisory, you build capital, you build a track record, and then you graduate to principal. Now, I know what you're probably thinking. If this is so good, why teach it? Now, that's a fair question, but every single deal is unique. There is no competition. There's only collaboration. The $600 trillion global capital market isn't zero sum. So teaching builds a syndication network that multiplies opportunity. When one of our members finds a deal but needs a specific capital partner, the network provides it. When someone has a relationship and needs deal flow for that relationship, the network provides it. We all win by winning together. For instance, we had one of our members set up our firm with a capital partner relationship that resulted in a $500 million deal. Or Joey and Robert, who worked together to get a $6 million debt transaction done. These are just a few examples of what's possible when taking into consideration the network effect that we've created in our group. Plus, let's be real, I make more from one deal than from teaching for a year. This is about building an ecosystem and a platform. Now, let me take a step back here and tell you about Ocean. He's one of the smartest guys I know. He found my content online and decided he'd figure it out for himself, and he did. Within 4 months, he was winning mandates, closing upfront deals, and here's what he told me. He took 1,000 calls in his first quarter.
I took 1,000 calls within the first quarter.
It was absolutely grueling. He took 1,000 calls to learn which industries actually pay retainers, what deal structures actually close, and how to make capital partners actually perform, and what kills deals instantly. And Ocean is one of the success stories. Most who try a loan will burn through $50,000 to $100,000 in legal fees learning compliance and take 6 to 12 months. Discovery broker dealers reject them and have countless deals die from structural mistakes or burn relationships from rookie errors. I mean, sure, you'll figure it out eventually. Ocean did. It only cost him 1,000 sales calls and more than $100,000 in legal fees. And 6 months of dead deals. That's hundreds of thousands, if not millions of dollars in education when you factor in opportunity cost. So the point is, I figured out how to compress years of expensive lessons into 90 days of systematic implementation that serves as your foundation to transition to principal investing. So let me break down exactly what you get. First, you get direct access to me. You get access to my entire advisory team, all of my mentors, including my mentor with 40 years investment banking experience and billions of dollars in transaction history. You get WhatsApp, phone, Slack, 24/7 access. We're available when you need us. If you hired this level of mentorship independently, you're looking at $150,000 a year minimum. Second, you get access to a retained SEC and FINRA counsel. Now, these aren't lawyers you just call when something goes wrong. They're on retainer. Your questions get answered, your contracts get reviewed, and your structures are validated. The independent cost of this alone is $120,000 to $200,000 a year in legal fees in 1 year alone. Third, you get the network and the community. 100 plus active deal makers, 2 calls every week, deal syndications on every opportunity that you bring in. This network would take you decades to build. The relationships alone are worth more than the program entry fee. And fourth, our proprietary tech stack, AI-driven deal sourcing that finds companies before they hire bankers, customized email and LinkedIn scripting AI, automated email and LinkedIn outreach. These are systems that don't get flagged as spam and book you 10 or more meetings every single day. In addition to our custom CRM build for tracking every single moving piece and automated appointment setting so you don't have to spend your entire day in your inbox. I spent hundreds of thousands of dollars developing these tools for our firm, and you get them included. Now, fifth, you get every single template, every script, every model, every framework, all of that you get given to you from day one. Not just some course that was recorded 2 years ago. Our live systems updated consistently as we close new deals and develop new unique insights. If you add all of that up, you're looking at over $400,000 to build this yourself, just in your first year. And that assumes you could even get access to all these resources. The advisor network, etc. All of this took years for me to build. So there are two offers. There's the accelerator program. It's $50,000. You build with our blueprint and we coach you through it. Now, this is for operators who want to control the whole process. Now, the second offer in Dealmaker Foundry is the turnkey program, which is $100,000. We build everything for you. All of your legal structure, your systems, your tech stack, recruiting your advisory board, bringing on your capital partner relationships. You retain 100% ownership of the work product and step into a functioning investment bank on day one. Think of this as a franchise. Now, most people choose turnkey. They want to focus on deals, not building infrastructure. But either way you go, you're getting $500,000 or more in value for a fraction of the cost. And more importantly, you're getting it now while the window's still open. So let me be direct about who this is for. You qualify for this if you've already built something significant, a business, a portfolio, your career, whatever it may be. You have the liquidity to invest without stress, and you can dedicate at least 20 hours a week for your first 90 days. And you're ready for transformation, not just incremental improvement. And most importantly, you already know your next play is becoming a principal investor. You want to raise a fund, you want to do a roll-up, you want equity in deals, but you're stuck because you don't have the track record or the relationships or the deal-making skills to get there. Now, you don't qualify for this if you're still building your first few $100,000 or $1 million in net worth. You need immediate cash flow to survive in this business. If you're looking for passive income, this is certainly not for you. Or if you think this is the end goal instead of just the bridge. Now, listen carefully. Advisory isn't where you're trying to end up. This is the mandatory internship the ultra wealthy don't talk about. Every single fund manager you admire did deals for other people first. Every PE partner you've heard of learned on someone else's dime. Every family office that won't return your calls, they only work with proven deal makers. This phase is non-negotiable. The only variable is whether you navigate it strategically or through trial and error. Now, the strategic approach is construct an advisory boutique that generates substantial returns while you acquire institutional expertise and develop your transaction history concurrent with revenue generation. You cultivate LP relationships through active deal execution and master transaction architecture while commanding 7 or 8-figure compensation. And you do this within 24 to 36 months, and then you transcend the advisory role. You launch your fund, only this time you have a documented portfolio of closed transactions. Your advisors will become your GPs, your capital partners will become your LPs, and your deal flow will become your deal pipeline. That's the path. Advisory to principal, learning to owning, fees to carry, performance, and appreciation. Now, we only accept 2 to 3 partners every single month because of how hands-on our approach is and the intense crucible that we'll have to undergo with you to bring you up to proficiency. So here's your next move. You click the link down below, book in a strategic consultation with my advisory team. Now, this is not a sales call. It's a qualification session where we'll determine if you're actually ready for this transition, if you're one of the few who gets that advisory is just the bridge, not the destination. We're gonna ask you hard questions. We'll wanna know what your actual net worth is, what your liquid capital on hand is, and what your time capacity is. We only work with people who are positioned to succeed. The link is in the description below. We review every application in order received. 3 years ago, I was you. I was successful, but stuck at the wealth ceiling. And the only difference is I found the bridge from operator to principal, and I crossed it. The blueprint is below, and the window might be closed in the next 18 months. The only variable is whether you'll use it. I'll see the serious ones on the inside. Now, cliff note, if you're still watching and you're thinking to yourself, I want in, but I'm not quite there yet. Maybe you're still building your first business. Maybe you don't have the liquidity for our main programs. We have something for you. Genesis, our foundational program that teaches the same principles but focused on revenue advisory instead. Jack went from $5,000 to $100,000 per month in 120 days. William closed his first deal and bought himself a Ferrari. The investment is $12,500 and you get direct access to me. If you're earlier in your journey and you're ready to move fast, click the link, fill out the questions honestly, and you'll be prompted to book in a call for Genesis. But understand this, whether it's Dealmaker Foundry or Genesis, the window is the same, 18 months. The advisors, the AI advantage, the arbitrage, it all expires. The blueprint is below. Both paths lead to the same destination. Choose based on where you are today. Thanks for watching. My name is Louis Garros. I'm on a mission to change the financial system and help people like you along the way.